Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at SchnellInvestor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So the market swung a little bit this week with the pull down on Monday, rally back on Tuesday, and we're wondering just if it's got enough strength to push through earnings. I've got a lot of questions about what's going on, but I've got some other ideas that are starting to percolate, and I mentioned them in a presentation. Some of these ideas in a presentation earlier this week, and I just thought that I would share them today and talk about the rise of power on charting. So our agenda is that power generation is changing, and I want to talk specifically about that. And copper has been breaking out, and industrial metals are starting to move. So I want to just kind of encapsulate some of that, but add a little bit of flavor to it as we go forward. And for anybody that's interested, the website is up and running, and Dwight and I are working hard to try and put more content out there for you that you can use. And I had to take a picture of this just the other day, and it was the sun rising behind me, but you could see the clouds just in the overhead here. They were trapped in the shadow of the mountains behind, and so they had this. We had a cloud cover with the sun shining directly on the mountain behind. It was just striking, and the lake looked like it was just littered with silver flecks. It was quite stunning. Anyway, thought I'd share that with you. And if you're interested in the newsletter, I'm trying to build up my clientele base. So if you're at all interested, you can go to you can see all of this content that we've got here, and I announced it last week, but if you're interested and use the coupon code DAILY5, you'll be able to save $360 on an annual membership at the website. So thanks for considering that, and let's move over into the charts. So I want to talk, here is lithium, and probably, I'm not sure how many people know, but lithium is actually broken out to a new 2-year high and is just a couple of days away from trying to push through to even bigger highs than that. And down in the lower panel, I've got the rare earth metals ETF, and what you see on the downtrend here is we've started to break it, and now we're getting very close to moving up to new 52-week highs on rare earth metals as well. And it's this change in texture that I want to talk about today and try and show you that there's some big things going on. And obviously, I think on stock charts, I'm probably the guy focused on commodities more than most, and so it's just coming to light now, and I'm sure a lot of people will catch on in the months ahead, but I think being early is particularly helpful. So with coal and steel, obviously they're not coal is obviously not heavily favored in the world right now in terms of the environment. And then steel has been struggling, and it's been struggling with trade wars, and it's been struggling with demand. Oil patch is a big user of steel, and with the oil patch soft, so is steel demand. Now that we've got problems in real estate, we'll probably have some issues regarding new structures for commercial as well. So steel has been beaten down quite hard, and what we're looking for is to see if it can get back up above the highs of early June. And we're seeing the same thing in coal, and these are trying to rise off relatively desperate levels near 4-year lows, but nowhere near to kind of picking up the way the other stuff was. So it's not all industrial metals. That's what I want to make clear. It seems to be specific, and it's changing in its texture. So when we look at the industrial metals index, this is by Goldman Sachs, and this goes back 3 years. And we have a big trend line on this chart that's been broken over the last week and a little bit more this week, and a little bit of a horizontal resistance line. I'll call it at the 330 level, but we're trying to break through that. One of the promising signs we got this week was that the RSI is kicking it up and is giving us a new bull market signal on the weekly chart. So what does a bull market signal mean? Well, if I unwind this chart for you, let's just go back whatever a long time, 18 years, what you'll see is that the chart goes through periods where it stays above 40. I'm going to thin this out a little bit. Stays above 40, and when it does that, that's pretty bullish, and we end up with a big uptrend. And then here in this period, we were above 40, and then all through here, I guess we dipped briefly there, but we were above 40 for this whole thing. So without even looking down at the price, just focusing on the RSI, you can just see when we're above 40, that's a pretty bullish place to be. And then when it stays below 60, that's a bit of a problem. So when we get this price action in here, that's not what we want to see, and so we'd mark that in red. And there's a brief period in here for whatever, a year, where it wasn't near the top. So the way we mark this is when you go and touch 70, that's the start of a new bull market. And then, well, if it had been down near 30. So in this case, it's all part of the bull market. And then here where it switches to 30, this marks a new bear market, and will be until we get back to 70. Well, what we saw is obviously it went all the way back to 70, and then it stayed up there for 2 years. And as it stayed up there, no big deal. And then it started to decline, and it spent a year, 2 years, 3 years declining. And then we had a brief bull market for roughly a year, 18 months. It wasn't really bullish. It basically just wasn't bearish. And then all of a sudden we started resuming our decline, and we ran down. Then in 2016, we had a good 2-year run where we had a bull market going on, and then it started to break down and the uptrend had broken, and we've been living under this RSI 60 for a 2-year window, and all of that leads us to the position where this is at least a clue that things are trying to get better. And to have it so early after we've just had such a big market pullback in March, and by July, we're already signaling a bull market on the RSI. So this is a very bullish setup for industrial metals in general. And then when we look at the PPO indicator, I like it when it breaks these big momentum trends, and it's been a downtrend for multiple years, and it's starting to break out of that. So to me, that's a very bullish sign, and the whole chart sets up for me to be something of interest. Now, when we look through different types of metals, obviously we've got a few different ones, but here's copper. And the big question on copper is we've got an 11-year trend line here and a 17 or 18-year trend line here, and we briefly dipped below it with the COVID crisis, and we've rallied back up. And now the real question, are we going to go from deeply oversold to breaking through this 10-year high and break out? And again, when we did this back here in the early 2003s, this was a nice place to get on board for copper. So we have this potential situation setting up, and of course we don't know if it's going to work out, but the first condition that would take is we would break some trend lines, and that's what we're watching for. And obviously back in 2003, this thing ran up and started a new bull market, and it was a bull market. It literally went from 80 cents to 380 in 3 or 4 years, and with that huge bull market run, it was staggering. And so we want to be aware of an opportunity like that, especially when it's a 10-year downtrend. So copper is looking much more interesting to me than it has in a long time. And when we do a close-up on the copper chart, so this is zoomed in just on the final 10 years, we can see that the PPO indicator just kept rolling over below zero, so much like the RSI, giving us a signal. Well, during this whole period, it stayed in a bearish mode, and you can see price action was horrific. And then down here in 2016, it changed and it started to rise up, and we broke through this zero level, and as we did, it stayed up above zero for 2 years, and that gave us a nice big uptrend in copper. And now we've got this big long downtrend. So what I like to see is this black line down here has broken through, and my PPO is now up above zero again for the first time since, I'll call it 2018. There are some brief wiggles at lower levels, but what we want to see is this push above. Looks to me to be setting up for a nice move higher. And it's that context, the big context of what's going on, that I want to focus on, because if you're breaking through 10-year trend lines, and a couple weeks ago we broke through this little 4-year trend line, if we're breaking through 10-year trend lines, that's a really, really bullish signal. And if I just take the PPO, might screw it up a little bit here to change the height on it, but let me do that. I just want to show you something meaningful here. By making the height so much bigger, one of the things that I would like to see, obviously, is you've got this big long momentum trend here, and if we started to break out to new highs on that, that would be extremely bullish for me. And that's mid 3.5%. We're sitting at around 2.6 or so, so we have another full percentage point to go. But to break through that red line, I think would be very, very helpful. And talk about a big trend change, so not just a shorter term picture. So anyway, I want to see that, and when that starts to show up, I think we'll start to attract a lot more attention. But copper getting through this, it's actually a 295 level that we want to get through, and it's sitting at 293 at the time of recording. So if we can get through this $3 level and start to move higher with copper, that is a very bullish place, and in here is about 320, so we'd have a little bit more resistance getting up in there. But the setup is here that all of the stars are starting to align. So industrial metals are starting, the indexes are starting to break out, copper itself is starting to break out, and it's not in the steel area, it's in something more significant like this copper area. And I mentioned the lithium chart at the beginning. It's by having these different areas of the market break out, we can really see changes happening. So here is the uranium ETF, and the reason I want to point it out is look at the scooter ranking. This is one of the top ETFs in the US right now, it's in the top quartile with the scooter sitting at a full 80%. So the ETF is behaving better than 80% of the stocks, or 80% of the ETFs out there. And you can see we've just broken through this big downtrend for multiple years. So this is another area that starts to suggest something's changing. Now, this ETF has some Barrick gold in it and a few other things. So it's not just uranium miner. But the point I want to make is this chart is all set up to change, and a horizontal trend line here at $11, and we just keep jackhammering against it, and one of these days it's going to blow off, and we're going to go right through. The big miner that is in the space is Cameco. This is the US chart of Cameco's CCJ. The Canadian is CCO.TO. But what we can see is the chart's been range bound for years, hasn't really done anything. But what we know is that this ETF is starting to show different tendencies, and much like it did on copper, is starting to break above these big long downtrends. And it spent a couple of months here just wandering sideways, either building momentum or failing once again. Perhaps it's going to be like late 2019. But the fact that the rest of the industrial metals are starting to break out and starting to move, the rare earths and the lithiums and the coppers, suggests to me this whole area is ready for some kindling, and we could get a little bit of a fire going. So with CCJ, very hard to pick any sort of different chart style or chart shape on here. I'm just going to add a few years to the chart. What you see is, it's been a slog for the uranium ETF, really nothing going on for a long period of time, but we could draw that trend line all the way back here, and if that's going to start breaking a 10-year trend line, that's pretty bullish, or 8-year. For Cameco, we've been trapped under this 1250 level going back 5 years, but we just saw that in gold too, and we're starting to see, obviously the gold miners have broken out from 1575, or from gold prices from 1575 all the way up into the 1800s. Here we sit with Cameco building this 5-year base and looking like there might be an opportunity to see that tested to the upside. Down below here we have another company called NextGen Energy, which is in the nuclear or in the uranium space, and it's also sitting on a trend line. Obviously it's going to be a much more volatile stock. It's a $2 stock. It's just a little junior miner, but I put it on here to show, it's showing a different picture than Cameco. Cameco's kind of showing stable prices, whereas this is showing downtrend, and it would be a meaningful change. And you can see when it actually broke that 18-month downtrend, it shot from $1.50 to $2 almost immediately. And again, that's a 30 or 40% gain. So commodities can really deliver these big punches to the upside. When I look at the broader commodity segment, one of the things we're starting to see is that the demand that we're seeing, is it just energy in general, or is it specific? I'm finding it specific. So again, here we are in lithium, which is more of a battery, copper, which is more transmission of energy than something like oil, which would be the actual energy itself, and then we're using pipes to deliver that, whereas copper delivers electricity, so it's a different form of power, and lithium delivers a different form of power. So very interesting question. And as we go look at the US industry groups, we can rank these any way we want to. This is intraday from Tuesday, and what we see here is all of these industry groups had a pretty healthy move on Tuesday. Tuesday was a big up day. But looking up at the top, aluminum was up almost 8%, or aluminium, if that's the way you prefer to hear it. And here's the mining index, and it was one of the top performing groups here. And all of a sudden, exploration and production started to come back online here. Oil and equipment services was number 2. So all of these things are starting to relate towards energy and materials. And here's the basic resources index. Doesn't have a scooter ranking, but up 3.73. The industrial metals index here soaring. Non-ferrous metals, so no iron in them, copper example, doing very, very well. Look at the scooter ranking here, 97. So in terms of what was up strong on Tuesday, there's a lot of stuff that's on this list that most people have given up for dead, and I think there's an opportunity to start looking around a little bit more. When we click on the scooter ranking and just sort it by scooter ranking, what we'll see here is automobiles, in this case Tesla and NIO, are up near the top, and we have other names, Ford, GM, all those not doing quite as well, significantly different. But nonetheless, the automobile, the electric car is starting to push, and then only 2 lines below that, in terms of scooter ranking for indexes, is we show non-ferrous metals, so copper and these other types of products, nickel, that are leading across all of the industry groups. So better than software, better than communications. Really a huge move here, and to have those scooter rankings of these non-ferrous metals start to perk up so well really suggests taking a look at them. And here's the mining index sitting in here around 94%. That's just bullish. Can't really argue with that. When we look down a little bit further, now we see all these other names that everybody's been talking about, but the software index and toys index, because people are staying home. Trucking has been strong with everybody ordering packages to the door. Home retailers have been strong. Well, you see people staying home and saying, I should fix that up, or working in the backyard, changing the deck or whatever. All of these different components are starting to show up, but I think it's quite clear that there's something going on in the industrial metals that we need to pay more attention to, because the tone really changes a lot as we get farther down this. All of the industrial metals are sitting right up at the top here, above semiconductors, above indexes, or internet, above biotechnology. I think it's an area to lean in on a little bit as we head into the second half of the year. So what are some of the other ways that we can look at energy? When I created a chart list, let me just go grab it here. Whoops, I pushed the button on the wrong one. There we go, Market Buzz. So one of the things I did here was I grouped a whole bunch of charts together in order, and I kind of put the theme of electric cars in the background, or electric vehicles in the background. And I'm going to end up doing a whole paper on this to try and put it together as a special edition report. But one of the key clues that we've got going on here is look at how Tesla, for the last 5 years, its scooter ranking has has oscillated a lot, and now it's just flatlining up near the top. That's a whole different trend change. And when we look in on NEO, NEO doesn't have a scooter ranking yet because it's such a young company, but you could see this week we're testing the IPO high that it started with, and it's not uncommon to have the IPO kind of weaken and then new investors pick it up, or I'll call institutional investors pick it up, and now they're starting to push this higher. So from June at $2 or $3 to $16, pretty radical move already. And again, this is another electric car company. But next on the list is Nikola, and Nikola is a hydrogen company making trucks, and perhaps you've heard them on CNBC as they bought out another company that was publicly traded and then changed the ticker symbol to their ticker symbol, Nikola. And you can see this rapid move, and one of the funny parts here obviously is Nikola Tesla was the first and last name of the great scientists, and what we see is Tesla picking up the last name, and then this one has picked up the first name. So quite a radical transformation here all around his name. But nothing like a ballistic move from $10 to $93 and a pullback to 50, well, even 40 here last week. These parabolic blow-offs usually have some sort of a give back. Who would be surprised? And again, we just saw that on the previous chart where we had a moonshot and then we give it back, and then it ends up building a base, and then we work out of the base. So this is not uncommon to see. But when we look at copper miners as an example, stepping into this particular space, this is one of the clues that I think is more important. We see that on the copper miner, the 2-year downtrend that's been going on here with all the big majors is starting to break, and that's a pretty critical area. Look at the scooter ranking moving up over 90%. So this is an ETF of copper mining companies, and agreed there's some gold miners in here, but nonetheless, they're pushing out to new highs, and copper's doing the same. So it's not just the gold miners, it's the metals part of it. And then we're also seeing a breakdown in relative strength, or a breakout in relative strength. And what we're talking about there, so each day you compare the S&P 500 against this ETF or whatever ticker symbol you're looking at. And if the S&P 500 was up 1.5% and this ETF was up 0.8%, well, then the line would tick down because the miner is underperforming the S&P 500. So COPEX is underperforming the S&P, so it slopes down. And then what happens is, as it starts to outperform, it's going to go from underperforming and start to change some trend line. Now, at first, it's just a trend line, no big deal. But one of the other things we're starting to see here is it wouldn't take much for us to make new 52-week highs in relative strength. And from an institutional perspective, scanning for 3-month highs, 6-month highs, 1-year highs in relative strength is pretty informative. So this is one of the complete areas that I think is really interesting at this point in time, because we're starting to see the copper miners outperform with the price of copper moving up. And as this does so, the price action on this ETF is now better than 90% of the ETFs out there. That's significant. I mean, we're up against some high-tech names and all that kind of stuff. And this chart is pushing to new highs. So I really like that. And again, I really like the break in the downtrend in momentum. So momentum was staying below zero for almost 3 years here, and is finally starting to surge up and give us a push to the upside. A very positive sign. Okay, so with all of that, now I just want to show you the top 5 copper miners out there, and or industrial miners out there. And what we see here, this is BHP Billiton out of Australia, but going back to early 2019, 53.90, 55, 50, 57, 52, and we're sitting right in here, and we're trying to push through this zone. Well, now we've got this little short downtrend that we could mark for 2020. But more interestingly is any sort of breakout through these other levels here as we go higher would really be helpful. And we can see that the PPO has broken this downtrend going on for 2 years, or for 18 months. breaking it, and we're now moving above zero in what we like to call the summer position. So below zero and rising, over here below zero and rising is the spring position, above zero and rising is summer, above zero and falling is fall, and then when you're below zero and falling, that's winter. And you can see price can move down relatively rapidly there. So we want to be aware of that. Anyway, the point being, we're now in the summer position on momentum. We would be nice to see a little more volume hit the stock. That would be helpful. Probably as we go through 52-week highs, that might actually happen. But we're back here testing it, and it's very recent. Coming off this hard low, this was a 50% discount, and here we are running back up on the stock, and we're already back near all-time high. So one of the stronger areas of the market to come back, and we can't use the volume candle yet this week because we're only a couple of days in at the time of recording. For Freeport-McMoRan, we briefly broke out to new 52-week highs this week. This is really comforting to see. And getting through this new 52-week high, we're getting on our way. That's a classic example of confirmation of what we're seeing out of copper. So copper's still trying to break that big long downtrend, but in the meantime, here's a miner actually making new 52-week highs. So really quite bullish, and we want to see that continue. Scooter ranking for this individual stock is up at 95, so 94.7, so better than 94% of the stocks out there. That would include a lot of these tech names, so don't just dismiss it as no big deal. I think there's something going on here. Here's Rio Tinto. And what we see on Rio is this 60 level that the stock is hitting this week is a breakout to new 52-week highs and all-time highs. $57, $58, $58, and now here we go over 60. So a really nice push, and again, Scooter ranking pushing up nicely at 81, so better than 81% of the stocks we're tracking against. All of that looks very, very healthy. When we get into Teck Resources, so this is a Canadian company, and they have lead and zinc and copper and broad perspective like the other companies do. But what we see here is a big 4-year downtrend and momentum just starting to break. So this looks very, very tempting. We're holding above the 10-week moving average, and a push back above the 40-week here would probably be meaningful change in the stocks. We want to watch for that sort of trend change to take place. We're in the squeeze right here between $10 and $12. Price sitting in the middle. Is it going to be able to break out? And I would think with the rest of these starting to do that, that's helpful. And we'd like to see this Scooter ranking get above 30 for the first time in multiple years, especially in the commodity business. I love it when they're oversold and then they go bing and they can go for a real run. So be looking for that to start to show up. And lastly, I want to show Vale out of Brazil. And what we see here is the chart. The PPO is just getting to the zero line here from the spring position. It needs to get through and get into the summer position. But we were up around 15.15, 13.80, 13.67, 11.32, and now we're pushing above. So we're at new 4 or 5 month highs, but we haven't been able to get back up into this range. So here's one more miner that we really want to see break out. So all that to say, take a look at the whole copper equation. I think there's something there. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. You can also see the recording on StockChartsTV YouTube page, and check out other information on gregschnell.com. Thanks for joining me. Bye-bye.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.